All right, welcome in, ladies and gentlemen. So this morning, we're looking at Twilio. It's been one of the movers in the market, so I thought I would do some analysis on it. And just to cut to the chase, I got a target of 228 to 245, anywhere between May to end of August. That's a wide time horizon, and I'll get a better idea if and when we get closer to that area. But for now, I want to talk about the more immediate targets. And just for some context right here, it took 600 days plus to get all the way from top to bottom. And we've been in this area for over a year. So there's quite a bit of buildup here, right? And we have that pennant breakout. So I think that's a great thing. And we also have this trend line with a lot of contact points. So I think it's a valid trend line. And I think that trend line was confirmed once we came down to support, right? So there's a lot of confluence right there, and everything looks textbook as far as the breakout goes. But my question is, are we approaching that point of contention, right, where we can see some pullback? Now, to keep just something to keep in mind, we haven't been up here since January, so all of this is pretty much fresh resistance. There is a lot of buildup, so I think there also exists the possibility to blow through that if the conditions allow for it, right? If they're favorable conditions, and we'll get to that in a second also. But we seen what happened last time we approached the cluster. We cleared it out and then took a dip off that. But the main story is that it was able to clear that out, which opens the door for a bigger run, right? So we're coming off of this, and there really isn't going to be any resistance until just above that price point. So I think 81.81 is very likely to start the week. And what we want to see is to get above 83.86, because there's another gap around the 87 area. Now, once we get there, gaps are psychological in nature. People take profits, they like to take shorts or go the opposite way after a gap close. So if we do end up closing this, the first thing I'm looking at is 83.60 going to hold? Because if not, then we can certainly come back here. Now, for me, this 72.40 is going to remain the line in the sand. Anytime it's above that, it's in the bullish area, regardless if there's resistance up here or not. As long as we're above here, there's an opportunity always to go higher. All right. So dropping under that opens that retest possibility, to mid 60s, even a little lower, to the lower end of the 60 range, into that 58 range to test the pennant breakout. But I think in the manner in which it happens is very important. So if we were to clear this out completely and run up to that 103 and then take a dip from there to either here, which would be very good, still very bullish, or even a little further, which would still be bullish once we get back above, then I think that's a fantastic development, because we would have cleared out resistance, and it's pretty much a clear runway up until we get into this area up here, probably starting around that 130 area, right? And the only reason I have 126 is because it's kind of like the median, where it became support. It was support, bounced up, came back up to test it. So that's like a median area, but we know that anything above 130 is untouched. So that's another slight area of contention. But I think once we get above that 138, it's going to suggest that yes, we're on our way to close that gap. Okay. The way I see this area right here is that this is going to be the bulk of it. This is going to be the major area that we're going to see a fight. This is where we see a lot of volume come in the first time, which actually pushed it back up. And when it did come down, it bounced up quite aggressively off of that area. And then if we zoom in a little bit more, we see that there was 3 contact points right there, 3 tests on it, 1, 2, 3, and then the gap down. So there's quite a bit of resistance there. We may even see, once we get up there, we may close that gap, come back down to establish, support, and try to get those other ones up there. But again, this could be choppy. We may see something like before we even get up there. So I want to draw some attention to a couple metrics. So starting with this, the fair value to this stock, according to the discounted cash flow model, is 101.54. Now I think it's important to note that these metrics tend to fluctuate quite a bit because they're based on current price, uh, um, shares outstanding, and a variety of other metrics that tend to move. So this may look like 101.54 today, and it may change next week, depending on if those criteria change, right? And they do, they often change. And then looking at the docket for the week, there really isn't anything until the end of the week, which is the PCE, because everything before that, like on Thursday, we do have some fresh data that's going to be like all of this stuff for December, the December data. That's going to be something to watch. But this Q3 PCE, Q3 GDP stuff, this is pretty much final revisions. So unless there's like a significant change in either direction, up or down for these, that's pretty much already baked into the pie, right? And then we look going into the early part of the week, there really isn't too much other than housing data, which has its effect, but I don't know. Again, unless there's something very significant there, I don't really see that changing. What we can expect and we should watch for is any Fed speak. We've seen what Williams did on last week. He kind of came in after the Fed meeting and was like, no one should expect rate cuts soon. So we know that he's a hawk, or at least hawkishly neutral, right? And I think that's the biggest danger to the markets right here, besides the hard data, is going to be the Fed speak. Because in January, we have a slew of other things to worry about, which is going to ultimately be, besides the hard data like NFP, PCE, PPI, CPI, and the Fed meeting, but also we have the Fed voting on the appropriations bill. So my thinking is that we may see something like we still run up here, and then kind of fade down a little bit, right? And it's gonna be a difficult situation maybe for January, but post January, especially if Congress can get their job done, then we have earnings season or earnings for this, and that may be the one that gets us the ball rolling. So I think it's going to require some patience, but ultimately, this would be a huge gainer if we can stay patient and just kind of trade the levels, right? Know where they're at. I don't think we're quite out of the woods just yet, but yeah, there's not much left to cross. Once this is out of the way, and if we can load up, I think that's a blessing, like I said, and then boom, we take off. So I hope this helped. If you guys are interested in any other videos or anything, any other tickers or something you want me to look at, just drop it in the hashtags, drop it in the comments, and give me a like. It goes a long way, helps my channel grow. And yeah, best of luck and happy trading.